Hello, guys. Hope you're all doing well. We're live, and this is part two of Module 6. This is from the Price Action Principles course, and it's been brilliant to bring this to you guys. It's a privilege. Has been many hours and many late nights making it. So I really hope you guys appreciate it and find some value within what is shared. So look, without further ado, shall we share a disclaimer, and then what we'll do is have a look at the charts. So please take a minute just to read this and have a look, and we'll jump into it. Right, so there you go. Please take a moment to have read that. I'm not a financial advisor, neither is Johnny when he jumps on and does his stuff. So it's all part and parcel. So with that being said, let's take a look. We've got Bitcoin here, and I've changed up the general arrangement. So the color is a bit nicer on the eyes, and yeah, we'll have a look. Anyway, so I'll just make sure you guys can hear me. Great, no worries. Yep, if someone can just post a comment to say, yep, you can hear me, that'd be fantastic. This is the final part, Abraham. Yep. So we've got an exclusive 6 people in here. So that's pretty good. It's an intimate one for the last one, but that's all good fun, guys. Great. Thanks, Gary. Rightio, guys. So taking a look at Bitcoin, what we want to do here, this is a completely naked chart, as you can see. I have got some key levels that have been marked out previously, which I will share shortly. But what I want to do is just take it and show you guys how I would actually approach a chart, and really to get a form of some directional bias, because to be fair, that actually isn't covered in the course in terms of how to establish directional bias, but there are a couple of ways that I like to do it. So look, this is the daily, as you can see. I have a set of Fibonacci levels that I use if I pull from a low wick to a high. And these levels here are shown just here. But what I'll do is you can check these out in the settings as well. So if you just pause the screen, if you're looking at this in the future, then you can grab them and be on your way. So there you go. I use these because they are mainly the respected fib levels. There's one in here, there's 2 in here that aren't, and they are the 118 and the 893. Reason being is just for aesthetics, really. So we've got 236 and the 0. All it simply is 0.236 divided by 2, and that gives you the difference between there and there, the 0 and the 236. And it's the same for the 786 and the 1, just to keep it nice and uniform. And you can actually see here that the 893 is quite respected down here at the bottom from this big pin bar wick. And you can see that price does play around at the 118 as well. So anyway, with a move like this, now we talk about having, if I can just draw over here, the fib levels. So these are the ones we've been using in the course. You might not be able to see them very well, but I might just change them to white for a second. Oh, sorry, I've got some background wasn't very bright. All right, so when we have our fib levels over here, we're looking for the 1 up to the 0 when we pull a move, right? We're expecting price to fall back down to the 618, 702, or 786 level. And if we replicate that, and you kind of go like this, where we've got a swing high, something like that, if you're expecting price to go into this area, and it's a bit of a common phenomenon, even when we're going short, right, to do the same thing. You know, you're expecting price to come down, back up into this area, and down again. Now, if that's the case, then there's no reason why this can't replicate on a higher perspective as well, because price is fractal, as we know. So what I do here, and I hope I've explained it quite well, is we're doing the similar sort of thing here, right? So we're going, right, prices come up, it's hit the 0, so we're really expecting it to fall back into this area down here. So if that's the case, you can then start to build some directional bias. But the key thing, though, is market structure breaks. So if this area here is broken, which you can see, and we can add the MSB on there just for shits and giggles, that this swing high has been broken somewhat, although it's quite wicky, it's not super convincing. But because this swing high is broken in the theory that we follow for structure breaks, where we have a price runs up like that, we call that a break. comes back down, retests, that's a break, so that's a trend continuation. Now, if we come up and we have something like that, as we're seeing here, price comes up, mucks around, and breaks above that, you'd be coming down here and expecting somewhat of a retest either here or perhaps down here. So if that's the case, and we can see that down here, we've been talking for a little while now about how we've been expecting to have some sort of price action down this way, which I think I was saying in Telegram, Discord, and generally on Twitter as well a little while ago. But look, that's what you can generally expect. So if that's the case, and we know that we're looking for things like that based on some structure breaks, then why can we not then form a directional bias based on that from a high time frame down to a low time frame? So if we take that, we know that market structure break has happened, so we'll delete that. If we now think that, hey, look, we've had this price run up here, we do think we're going to go test this area. So why can't we then form that our opinion to jump in the lower time frames, let's say 4 hour, and around this area, which was the last live stream, we were trading around here, and we had a trade here on the universal approach using a 4 hour candle that then showed us that price was running down. But if you had taken this small scalp that we had, whether it was there or whatever the case was, and you had your stops above here, you can see in reference to the 618 level down here that you were kind of expecting, that you get a really good 6R trade here, had you had the balls to jump in and step in and do whatever you needed to do. But that's what I'm trying to really get across the line there, is that this is a good directional bias that you can take to say, hey, look, we actually think price is going to run back up. With that being said, I just wanted to show something else on the daily, because the way I would normally change this up is once we have a structure break here, what I would say is, okay, in theory, although it's wicky, as we mentioned, this price has been beaten now. So then I would pull my my fibs from the wick high down to the wick low. And you can actually see here now around the 618 level, you do have, if price was going to do the same thing as we talked about, where price potentially runs down, comes back up, tests this area, possibly the 702 for possible further downside, well, then you already know that you've got another directional bias to form. So you've had one up here previously that said, based on a fib from this level to this level and back down, we've encountered that. But now what if we go up here and we hit that 618 or the 702? And what I can show you is this. We'll change that to white just so you guys can see it. And this starts to give us some confluence, right? It's the same sort of principle of price coming down and retesting this area right through here. So what have we actually got in this area if we look at it from a high time frame perspective? Well, over here we have a big bearish order block just there. And what else do we have? Let's have a look on the VPSV. Won't show us on the daily. So, it does, sorry. We also have some targets up here in the form of naked points of control, and generally this area here of a big resistance zone. So now if we again pulled our fibs, and I'll just get rid of that VPSV, from low to high like that, but we change them to our general fibs, you can also see that there is, around these areas, some confluence with some of these zones here. So the 702 is very close to the 236, and in conjunction with this overall high time frame bearish order block, So then, if you start to think, well, if price does recover this level, is that such a silly place to not target longs for, and then perhaps enter some shorts if there's confluence given? So these are some things that we can look for. So look, that's not necessarily explicitly shown in the course, but I just wanted to share with you in terms of how you could potentially use that to form your daily or your overall bias where price is going. And we can actually go back and have a look at this, not necessarily here, but same thing in this area. Same principle, low to high. And if you think that generally, call it retail or however you want to frame it, if they think, and I say they because we as price action traders possibly like to think of ourselves as a bit different from standard retail, but let's say they go, right, we think we've got some sort of parallel channel forming. Then you can see then if price comes back up here, look at where that parallel channel smacks bang on, where people would generally be targeting as well. Now that's just going from here. You had deviation in this area and reflecting upon these zones. I'm not a fan of diagonal support or resistance, but it's just something to think about as an added potential layer of confluence. So again, same sort of deal, right? If we're going from low to high, then there's no reason why you can't expect to shoot down to the 618 level. So with that in mind, had we ended up here in somewhere, then you can start to build that case to think, well, hey, we might trade down to that 618. And if we're going to the 618, does it make sense that we might actually go down through this area here and take all those stops out that are nestled here from where everyone was long previously? And it looks like it's done that, right? So if we just draw a rectangle down here, which indicates to us that there's potentially stops down there, then as we draw that across, let me just use lows swept. I just got to change the color because I'm just migrating across still from my the previous version. That's our lows swept there. And you can see that that is potentially a liquidity run. So prices come down, really tap right through there. It's actually hit that 893 as we've talked about before, and then it's come back up, hit the 618 pretty fairly, and now it's come back down again and bounced around the 786. So you can see these different confluence factors of how price can, based on that singular premise of using our Fibonacci levels. Again, oh, sorry, just change that to white. If we're expecting price to run down like this, high to low in these areas, then there's no reason that we can't build that confluence level based on that. So look, I won't harp on about it too much longer, but here we've got some EMAs you can use as well. So Emperor, also ICT. If we go to inputs 9 and 21, so I'll start that I'll show you again. It's the 4 EMA. If you go into indicators, 4 EMA, 9, 21, 50, and 180, these will change as you input them. But if you go to settings, and you can change them in this zone here, and you can change your style, color, and that sort of thing. So I've got a blue and whitish general vibe going on, so completely up to you guys with how you'd like to arrange them. But now ICT teaches this premise where if you have the 9 and 21, I'm sure it's the 9 and 21 from him, then, or it might be the 9 and 18 actually. That's cool. Either way, they're loosely close. When you have a cross of the EMAs up here, then this sets you up for a downward trend. So if you're looking, ideally, if you're not too confident in longing in a downtrend, then you just focus on shorting. So if we drop down to a 4-hour chart, well, actually, sorry, if we drew a line from here, let me just get the horizontal line, vertical line, sorry. So we know that that is our zone there, right? So that's where they cross, and they don't cross again until just recently on the 6th of February. So if we just go back here to the 17th of November, we look on the 4-hour chart, and you can see back here, that was what we crossed on the daily. We've obviously crossed previously on the 4-hour. You can then start to really see how you can get set up potentially for some shorts, using the fibs there. It's as simple as that. You see a swing high, up high here. You know that we're bearish in a downtrend on the daily, then you can enter here. And even if you target these 0 levels at the 702, 0 there, you've got a 2.06. Had you held on and you use these targets, you actually get a full rundown here. And that's as simple as, it does take a little while. So there's a 5R trade, and that is from the 4th of December, 21st of November to the 4th of December. So in terms of days, you've got here 12 days, 16 hours. So look, it can be quite extensive for a 5R trade, but if you're using lots of capital, then you could potentially be laughing, and that's a month's income for a lot of people around the world. So look, that's 2 ways that we've shown now that you can establish directional bias, I suppose. So I hope that has been insightful to a certain extent for you guys, but that's not super duper explained in the course. So the main premise of the course, as we all know, is trading a range. So based on that, we've got a few things to look at. So we've ticked off our high time frame. I'm just looking at my list here. The next one is there's something that we teach in the course that is called the universal approach. So it's a bit of a crappy term that I came up with that really works out that if you were to pull a Fibonacci or a Fib level on the daily for the previous daily range, which in this case is this candle right here, so the 26th of February. The weekend's probably not great to use because of volume, but anyway, it's all good. and we have a range set of range fibs here. And I'll just change these to white so you can see them on screen. I'll make a template for it. All right, so now what we do is we pull that swing, go from the swing low to the swing high, and that's it, just through the wicks there. So then you drop to the 15-minute time frame. Based on using this now, you can see that's quite wicky. We'll still use it. And then you've got this area down here, the low. If you recall in module 4, I believe it was, we have a concept called rally. So if you haven't heard of it before, it was rally like that. Text go white. So rally. And what it was we establish a range first, which is the RA. Then we have a liquidity event. Then we have an entry, and then we have an exit point. So if we were to use that here, we've used the universal approach to build this range right here. If we now establish liquidity, you can see here that these lows are run right through there. And this is the first time I'm looking at this today as well. I actually have been spending a bit of family time. So again, this is just something that you can pick up straight away and start to get into once you have this process in place. Then you look for an entry point, but then you also look for exit points as well. So here on the 15-minute, what we have got is probably a crappy suite of entry points, to be fair. So normally you'd expect something really nice and neat to wet the whistle, which we would look for something there. And again, I've just got to change that. Sorry, guys. All right. So here, actually, it's not too bad, to be fair, but you would get front run. So here, you're expecting a retest of range low, which actually works quite well if you pull a fib from the wicks to the high point and back down. Like we say, you're expecting that retracement to the 618 or so. If you got in there, you're probably a couple of dollars away, to be fair. Yeah, it looks like you wouldn't really get it. But it would be pretty close. But yeah, had you said perhaps here, and you were game enough to use that last bearish candle for your run up, then yeah, you could possibly get an entry there. So with that being said, that's your entry point. Let's just call it entry, for example. Then you have got some exit points you're looking for. So if we have the VPSV, and we'll just fire that up so you guys can look at that. Because remember, guys, nothing in trading is perfect, right? So we've just seen an example there where you possibly have to be maybe look for other triggers, but it's just never as easy as simple setups. Look, here we've got now the VPSV shown, the volume profile, session volume. And you can see down here that there is a point of control that lines up perfectly with the range low. So that before, I assume I can't really see it being tapped there. So it's showing it was hit here, which means when we had the price running down, it's come through here, tapped that naked point of control, and then it's moved back up. So now we've developed another naked point of control here, and price has run up and away. So you could potentially aim for this area here as the value area high of the current day. Or we should jump back one step, sorry. We should do the previous day. So you can see that the previous day value area high, if you're going to expect to run out of it, liquidity event, clear that naked point of control, and then run back up on an entry, you've got a potential target up there, which does coincide, if using a wick for this range, with mid-range almost. So that's one point you could use. So we will just hide this guy now. We've also got here on the 15-minute, I wouldn't really say a fair value gap. I suppose if we look on the hour, there could possibly be, which is, look, I'd say it's a liquidity void where there's a lot of price action to the downside, which wants to be balanced back out. But if you jump back to the 15-minute, you could possibly put something in there. I would, if I was going to, I'd do something like that, where I'm thinking about some sort of fair value gap of sorts here. Again, it's never really perfect, but you can see that this does work. So we could establish that. And then that's your entry point. And then we've talked about exit. So you've had that naked point of control / range high. You've had the fair value gap as well here. You've got the the entry point after your liquidity grab from the rally concept, range, liquidity event, I suppose. And then you have your entry and then your exits. So here in a perfect world, let's say you enter there. We've cheated a little bit here because it's not always sunshines and lollipops with trading, as we've said. I'll just bring this guy back here. I wouldn't put my stop loss here at range low. because if you're the market maker and you're thinking, well, every bastard's doing that, you're going to really trigger that on you. So I would put my stop loss a couple of swing lows back, maybe here. And if you go and aim for even the top of your fibs here, or the fair value gap, or range, mid-range, then you've got a great trade. You've got 3.92R if you didn't take off your profits as you go. So that would probably equate to being, if you stopped out here or you stopped yourself here, then possibly maybe 1.5-ish if you took sequential profits at every single one of these spots. Or if you went to the mid-range, then you've got something more like a 2.5-ish or something like that, I assume. So that is that's using the universal approach in conjunction with rally. So with rally, and these are both from module 4. If anyone wants to go take a look at them, it's all free. Go and check them out in the Discord or the pinned tweet. What else have I got? So that one was based on, I actually didn't cover one thing, come to think of it, which was I would consider. Now we've got market structure breaks. It's quite a touchy subject. Some guys out there consider it market structure shifts. Some say it's a break. Personally, for me, this looks like a possible trend reversal. We've had price really run to the downside, looking for that liquidity as we've seen here. As it comes up, we've retested, bounced off the top of it. But then if you can see here as well is that with price running up and past this level, I would personally consider that with the retest there, a signal that we're going to go higher. So with that being said, that is what would trigger me, as we always like to use, is a market structure break. Because for me personally, market structure is key for everything. I wouldn't enter a trade unless I have a somewhat close or clear market structure break. I did share a trade, I think it was Matic, on a 1-minute chart on Twitter not long ago. And looking back, I did actually muck it up because what I hadn't done was had the clear break of structure. It was kind of equal highs, which buggered me up, and I got stopped not long after. So we all make mistakes, right? And it's just about journaling and learning from it. So please, if you want to pause that or you want to take some notes as needed, I just want to remind everyone this isn't going to be a PDF course because it is a live action version. So please just bear that in mind. And there'll be captions as well for anyone whose English isn't the first language, or if you just can't understand the Aussie accent. I get that a lot, so it's all good. What we'll do now, guys, is I'll just make this a new file here. For anyone who's not sure as well, you can actually, this is how I would go and then save something here. So let's call this a UA for universal approach, daily to 15 min, example. And then every single thing here, I would grab that, put them in there, and then you can hide it just like that. And then to make things easier, you can actually just toggle that file and then turn them on again. Sorry, turn it off, turn it on again. If you want to lock things, you can, and then I can't move any of this. So if you've got a high time frame trade set up, but you want to look and back test and all that sort of thing, you can lock this because there's nothing worse than actually, as you're scrolling in and moving around, you grab something and then it disappears on you. So or moves around, then you've got to reset your fibs. It's pretty simple and straightforward, but just a little tip for you. Okay, so that one there is that's the universal approach using the rally concept based on a daily range. We did talk as well about the 4-hour ranges. So what we had was in module 4, if we've now got the premise that in a daily range, if we can expect, let's say 4 times trades a day, right? Let's say a few trades a day. And we're using it for day trading, then you work it out and you say 24 divided by 0.25, so 0.25 being 15 minutes because that's the time frame that we like to trade on, or I do personally, then that equals 96. So using that premise, now we'll just go here so you can see that. Using that premise, and this is also shared in module 4, so using the same premise for a 4-hour chart, so 4 hours divided by 96 equals, I'll just grab my phone because I'm not super duper, I can't remember it. So 4 divided by 96 is 0.041. So 60 divided by, yeah, so it's about, I think it was 3.5 minutes or so. So in that case, I just round it down to, let's call it 3.5-ish minutes. I just round it down to a 3-minute chart. Right, and look, I mean, this is just something I came up with. I'm not one of these wankers that's like, oh, how good is that? It's just something that I saw, noticed, developed, and figured that I'd share it with you guys. So yeah, do with it what you will. You can see that the daily does work, but if we use the same premise now on the 4-hourly, then we use the same concept. So we pull a range from top to bottom as we do there, and I'll just zoom in so you can actually see what's going on there. So it doesn't always. Johnny's actually pinged me before saying that my fibs don't always line up with my wicks. That's just me being a lazy bastard. So 4 hours down to 3 minutes. Using the same sort of premise, you can see that we don't really get much love here because of the action, but this is a prime example where you could potentially look for getting in on the run up. So if you're looking through this area and you can see that there is definitely a fair value gap here on the lower time frame, let's call it from here to here. And what else have you got? You've also got probably some, I'd say there's a lot of stops resting up here. So there's definitely a lot of buy side liquidity through there. And we'll just keep that highlighted as blue. Now, if we look through here, we can see that we do come up and you're looking for, you're always looking for some key areas as well. Sorry, that's not working. What is going on there? Don't know what was happening there. You can see that once this area is hit and it does find some, that's a key low. Once it's hit, it finds some support that it was from resistance. Can you get an entry through here? So you can see this run up is happening. Do you get a move? Let's just get rid of the FVG for now. Let's chuck him over there. Pull our fibs. What do we call them? DM white fibs. There you go. Look at that. So you do. You get an entry right there at the 702 level, which again sort of coincides with these tops and an area over here as well. So had you then pulled that, you've got your range that's set up from the 4-hour chart that we looked at. So it was the previous level through here. Then you can see that you're well and truly potentially on your way up, aiming for these areas. In fact, you know what? I might have actually set this up wrong because, let me just check. We would be searching to beat this one and that one. So I've actually cocked that up, guys. That is absolutely my fault. But nevertheless, let's go and have a look. So we'll drill back down to the 3-minute chart, get rid of some stuff. Because what I did was we should be using that within this area here for the next trade up. So that's my bad. Let's go back and have a look. So we can have a look down here in this zone. This is the beauty of backtesting live. Down in white range. There we go. So we're on the 3-minute chart now. And through here, if we then extract this out further, that's where you can see that you have, well, it's pretty interesting actually. It has smacked right bang on the middle zone there. And you still have the same targets anyway, so it's not too bad. And you do, I think, get an entry here. So if that was the previous range we were looking at, and you pulled, you'd have to be close here. Fibs here. You do get an entry, but then you're trying to just beat range high, aren't you, and then upwards and onwards. So again, there's no sort of liquidity spot here that you do see. You get some action beneath this mid-level here, which isn't really convincing, but still, you know, you've got, and you can see it playing out. This fair value gap essentially does get filled up here at the termination of the overall fibs as well. So yeah, if you had entered here, you wouldn't really get a move. So again, it just goes to show that on these live ones where we're not really checking them as we take a look, just for the authenticity, that it can sometimes not play out, but that's cool. It's all part of trading. And it's great that you can see it doesn't always work out spot on. So look, that's the 4-hour version as well. If I get rid of this now, because that was a crappy version, get rid of that, this guy, and we look at the 6-hour, there was another one that we worked out. Same premise before. that if we're using, we'll go and use it on this one here. Oh, mistake, got the colors wrong again. So this is the 6 hour version. And if you divide the 6 hours by 96, you end up, it works out best to use it on the 5-minute chart. So looking over here, if you prorate this out from this location, and we'll just get that horizontal again. Vertical, beg your pardon, mucking my words up. From there, and you pull that out, that's what you're trying to beat, right? So that was where the previous range ended, from the low to the high. We still had that fair value gap in here that we were looking for. And then possibly in this area here, you can call that a fair value gap as well, I would dare say. So looking at that after this point, are you looking for a liquidity event? There really isn't one from the rally portion, right? But if you think that price is going to come up and take this area through here, then you could potentially look for an entry in this zone. So had you gone up here, you pull your fibs up, and you've got your white fibs right through there. And the reason that you'd be looking at this is because several areas of market structure have been broken. So this one has been broken. Then you look at this one, that's been broken. But then nothing else is up here that's really worthwhile speaking about. So that's why you would pull the fib from here up to there, because that was the last swing high broken, which is quite wicky. So you could almost be in two minds with how that would play out. But when you do pull your fibs from low to high, it does fall back in an area that's potentially trade worthy. So you can see that in action there. And then you enter, like we say, so you can go to 702 through here. If you're looking for this order block, which some people have actually asked in the Discord, you can have a sequence of order blocks that then do form one overall. So I dare say on the 15-minute, that one is quite a large singular one. And you can see that majority of the time you're actually tapping into about 50% of the way into that order block. So if we did a little range from there to there, and we just check that out, you can see that you're smack banging close to halfway into that order block. If you pull it down again, you can see almost right there, and that's pretty unbelievable to see. If you're doing the body only, and we'll just hide that chap for a second, then you can see that that particular dip back in smacks 50% of the way into that order block. So it's pretty cool to see right there in action. That's something that ICT teaches, which is really interesting to see. Once we get that fib retracement though, then we're back on, right? So you're looking and you're maintaining the overall range, and you've got to ask yourself, from here, what are you trying to beat? Because now you've got your range established. There's not a liquidity event, but it's a trend continuation. And then you have got, after that, your entry, which you've made, and then you're looking for your exit points that we established here, and then possibly up here for your fair value gap. So let's say you enter there, right? You don't put your stop there because that's asking for trouble. Let's say you put it there, and then you look to close that fair value gap or the range high, then you've got 2.64R. So there's a couple of little tricks there as well. I'm just going to take a quick look at these, any questions that are coming through on the stream. So, yep, Abraham, we mentioned before, this is the final part. We have got here people thanking for the hard work. Look, not to worry at all, guys. It's all part of the fun, and I'm happy to help. Like I say, I'm no pro or guru. I just simply like to share what I've learned because it helps me learn and solidify the skill set, and also the same goes for Johnny as well. What else we got? Lebanon, mate, how are you? I hope you're doing well. Where is part one? Tron Crypto, where is part one? Mate, if you go and look on, if you look on the YouTube channel, it's there, or in my pinned tweet on Twitter, it is also in there as well, or Discord, you can find part one of this. It was 1.5 hours long. And Tron, you've asked again, mate. Yep, it's the same deal. The link will be shared. It'll go on Discord, and it will also be on YouTube as well. So, yeah, no drama. And thank you for that, AI. You've also mentioned that it's on Discord. All right, so with that being said, I'm just going to tick off my list again. So we are, how far in are we? 34 minutes, that's pretty good. So we've talked about the universal approach on the daily, 15-minute. We looked at the 4-minute. I cocked it up, sorry, guys. But then we looked at the 4-hour. And then we also looked at the 6-hour to 5-minute, just to show how we can look at that. Rally we have looked at, which has been pretty good. In the meantime, guys, before we go and take a look at some market structure-based ranges, is there any questions anyone would like to ask? Because we can certainly close them out as we go. Feel free to type them. I'm just going to delete some stuff and we'll have a clean up and we'll take a look at a 4-hour market structure based range. Because remember we had a time based range, or I suppose time frame based range. We had a market structure based range. Then we had a combination of both. So with that being said, we might look at the 1-hour chart here. But yeah, please, if there's any questions, feel free to ask. I'll just have a quick look on Discord for any. There was some in the live stream queries. So one chap had asked, this is from Ashish, and he had asked, hello Mindset, I have 2 questions, and I'll just snip this so you guys can read them as well. Should be able to share that here. There you go. So there's 2 questions. So hello Mindset, I have 2 questions. First, from module 4 about fair value gaps. So when changing the time frame, fair value gap also changes. So should we focus on fair value gap on the time frame we have charted, or higher than the time frame? Or higher the time frame, the better. I think we've just looked at a couple of versions there that you can see where I didn't quite feel we had a fair value gap on a higher time frame, but we did on a lower one, definitely. And looking at the screen here, you can see as well that this is the 1 hour. And there is, we call it a liquidity void here, where there's continued downside that needed to be balanced out. But yeah, look, I do advocate for sticking to whatever EMA you're using, if you're using them on the time frame you're trading on, and then also the whatever fair value gap you're looking at, stick to the time frame you're on. And yeah, just generally keep it like that. It makes life a bit easier and you don't have to chop and change. The second question is, what is the lazy/easy way to extend the working area of the journal above the losses, wins, total trade section? Look, it's not a stupid question. Currently, I'm just adding rows as necessary. So look, I will just open that if I can. Just bear with us. Get it on the other screen. All right, let's take a look at that. So look, down here, we've got a trade tracker through here. And I think your question talked about working area of the journal. Okay, yep. So it's this section. So yeah, all I do is this. All through here, you can see that it's formatted. That's obviously a manual input. Then you've got the universal approach, as we've talked about. Sorry, the method that you would enter and the time frame. So that's 4 hour, 3 minute. The one we looked at would be universal approach, 6 hour, 5 minute. There's your screenshot, just for anyone who hasn't seen this, and then your date, purchase time, risk to reward, etc., etc. Don't forget, if you have a result, right, and I'd manually enter this, but if you have a negative, then you need to do that. It needs to be put in as a negative, which will auto format and spit out your results. But to answer your question, which I just did the old politician version of dancing around, I would just go right click, insert one row below or above. And in theory, that will take the formatting across with it. And we can just prove that here now. And let's just go over here to the right and check that. Let's say we have negative 500. There you go. So it just shows that you simply just right click over here. This definitely works in Excel as well. In fact, you just go up to the top right and you just click a few insert rows. And then it does come across through here as well for your traffic light system, which also you then go through and use. So I hope people can find some value in this as well. It took a little while to get set up, but it was kind of a labor of love over a little while. So yeah, I think it's pretty cool. And the position size calculator as well is on this tab, where you can basically use your equity size, long, short, and then you can then travel on through and then check your scaling off comparison. So you'd have your target here, 0. These are the different levels on the fibs that you have, and then your profit taking levels. So that would be how much you're taking off. So you'd sell 30% of your position size. And based on that previous example I would have here, which I haven't shared, this would be a 2.1. So you need to put that in. Let's say you had $100 staked. You've just sold 30% at that level. That's your result, and so on and so forth. So you can see here that previously you have got over here, you're aiming for a 5R, but over here you end up with, I have to check actually what that ends up being. I thought it did show it before. Oh, I might have to amend that. Yeah, I thought it had shown previously where it was there, but maybe I'd taken that away. My mistake if I have. So I'll put a note there to amend that to make sure that you can see what you've got. I'm sure it was there previously, but all good. There you go. So I hope that has answered your question. I will now just go and check to make sure that there are, someone's just said, so Richard, you've just asked, is there a fair value gap forming now? Mate, it's hard to say unless you start to see price running down. I mean, that could then become a wick, right? So let's say that wick's there and price decides to really smash on through, then I wouldn't call it a fair value gap. I would call that simply a wick into support, and then off it goes. But in saying that, when we do look at our higher time frame, if we pull a fib, as we say, to establish what we're looking for from a where are they? That's not them. That's the one you're using, you silly bugger. That's the range. I don't actually think I did them. Cool. I hope you can see that. But look at that. If we pulled our fibs from low to high, and we see that we've got price coming through here at the moment. I mean, that's pretty smack bang on at the 118 level for a rejection. So I'll just get rid of that. And yeah, it depends on what happens here, right? So we've had a market structure break here slightly up top, but we're also at a key level of resistance. So if you were to look at it inverted and you start to ask yourself, would you now think that that kind of looks like a 3-tap, bang, bang, possibly bang down here? Let's look at that fib relationship. And you can see that not only from the wick down to the bottom here, you have the 118 level, you've also got the 702 level. So this could potentially have been an area of significant interest of people looking to short this as price came back up and into it. So yeah, look, it wouldn't surprise me if we could possibly see something like that. I mean, every man and his dog is going to be putting their stop loss up here. So if you check back a couple of wicks, possibly up there, something like that, and then you aim down possibly for the 618, which obviously there's confluence there because they're pretty much from the same thing. But yeah, there's a bit of confluence in this area, 2.89. So play it by ear, check out what it looks like. But yeah, we can certainly talk about that one depending on how it plays out during the week, particularly Monday, tomorrow, once volume kicks back in. So that's them there. Now we have got, while we're staring it in the face, actually we'll go back to the previous stream where we were playing in this area up here. And what did we do? We said we'd run up here and then come back down through. And you can see, I can't remember where we actually pulled our fibs from, guys, to be fair. I think we had something like that to there from memory. I do think something like that, which pulling from the low to the high here, we have a deviation from the range. Again, another deviation, which is a liquidity sweep up here. Price coming down, retesting range, mid-range, and then down below looking for that liquidity again. And then up she goes, hits the range high, and then truly shits the bed and comes back down. So there's a fair value gap in here that gets filled. And then anything down beneath here, this fair value gap as well, also gets filled. I'll just highlight them for you guys. Straight through there, and also straight through here as well. Johnny would call these single prints from exo charts, but yeah, I just call them fair value gaps. And once that occurs, then you can see that price, there's no point in price stopping here, right? Because we've talked about this a fair bit. Why would price just stop there, right? Surely it's looking for something tasty. So if we got rid of this, and this is also a method you can use where you don't necessarily need to use the range level. And this is what I had used last week, where I don't know what's going on down there. It's odd. Where once you come through this level and you have that break in structure right there, so you call that a market structure break, which it is because a key low is traded through, then you set your fibs up for, I always use the previous level where it breaks down to that zone there, and then we have our white fibs there, and price runs up and into this area, which up through here there is a bearish order block, which price interacts with, and then you get that key low there that you could be looking for a nice trade. I don't know what is going on with that mouse every time I go down there. That's odd. So had you entered the 702, great. But if you wanted to really go for this bullish bearish order block through here, go for the 786. Again, I don't normally like to go at the top of the fib. I like to go a bit back, and you can see that there is some resistance through here. Right through there, something like that. So you could do that if you're aggressive. If not, you can do something like that. And aiming down for that level at least, if not down here, and there's a couple of R there. So yeah, the key thing though, you can see how good this is in terms of We've got to pull that down to make sure we're onto it. But right here, that's pretty much smack bang right on the negative 0.618. As we zoom in, you can see that that is pretty spot on. So it's pretty cool to see as well, just the confluence there. Don't forget as well, if we jump on that 4 hour again, maintaining that 618 level, let's just check something out here as well. I'm sure we had this and shown it before. Yep, so that was that 893 level. So it actually worked. I've only just introduced that level in the last couple of days, so that looks really good for how close it was, and we can get in as close as you want to. It's somewhat there. Not to say that that's not really set up properly or the top isn't set up properly, but yeah, I mean, it's pretty close. A few layers of confluence, so it's pretty cool. I'll just check the Discord now for any more queries. Okay, so Louis, you've asked a question. So aren't we at a bearish daily order block on the mid-level of the high time frame range? So let me just have a look at that question. Just show it on the screen again, sorry. I've actually skipped a couple of questions. But anyway, so aren't we at a bearish daily order block? Let's take a look. At the moment through here, if that's what you're referring to, as in this zone here. If that's the one you mean, then what have we got? Yeah, okay. If that's the one you mean, I look, possibly. Yeah, okay, you're saying, yeah, that's cool. I mean, yes-ish. I wouldn't really call that one because we're not sort of seeing price run up before we come back down. But, I would argue that it is, within line with that key swing low there. I'm just going to pull that down. That swing low there, which price comes up and through, wicks through. And look, I mean, we are close to the wick high, that area there. But if we drop down to another level, I'm still not really convinced that it's like a run up before a run down. But I definitely would agree that, there's, I would say it's more of associated with that pin bar there, to be fair. But yeah, I would say that it's more likely to be the fact that we're at the 0.5 level here. And, people are really, you can see this area here, like people are super trying to short it. We're trying to get up and there's just so much resistance there. It's ridiculous. Yeah, I wouldn't really say it was a strong one. I'd say, look, I guess it is, but I wouldn't really say it's a strong one. Nothing that I would really base a big trade off of, to be fair. I'd be looking for something like this, where we've got, this zone here before that sell-off down there. That's truly a bearish order block, in my opinion, where price runs up midway into it-ish and comes back down. But yeah, not arguing, but I think that there's probably room for more strength in that one, to be fair. Hope that answers your question. But we're just going to have a look now. So we've got Louis, you asked another question. What is that one? Let's take a look. So sometimes you use the fibs from the low that broke market structure, and sometimes you use the obvious low, so in an uptrend. How do you approach that to make your decision? From the low that broke market structure, sometimes you use the obvious low. Well, it depends. Like I'd say I've got two versions, right? So I would run with, like down here, for a high time frame perspective, I would run with a fib from the low to the high to get a directional bias. But then if I'm entering on trades, then I would use, let's have a look, 5 minute, for example. Down here, I would be using something like down here. Let's look, it's not really convincing. We've looked at that one. That's probably a crappy one because we were struggling with the universal approach there. But even something like this, right? I mean, we've got a clear breaking structure through here. Price comes up, runs through it. I'd be looking, this is like almost a classic ICT setup. I'd be looking for down here, price from the swing low to the high, something like that. But the thing is, ICT says it's the bearish, and I actually put that in the course as well, to be fair as well. And so we'll have a look on the 15-minute time frame. Said it was the bearish candle before a run up. That's the definition of it. You can see here this is a bullish candle, but this is how people, it can become open to interpretation. Someone might go, well, hey, look, you said bearish candle, which you pretty much get that smack bang on entry, and if you pull it down to the candle high there, then you only really get the 618. I still would generally like to use this low area here. So although it's quite level with this zone here, I still think that I prefer to use wicks if I'm coming back down into it, and would use this low here rather than maybe, I think you're asking maybe instead of that or something like that. But either way, I would enter or use the entry based on that. But I think what's happened is a lot of people use this method now. So it's quite obvious to have beneath this swing low here a lot of stops nestled. So I would always chuck it a couple of swing lows back, there or there. And if you ask me, does it make sense to have the risk to reward? I mean, you got to ask yourself, how good is your winning streak? Are you getting stopped out more than you are trying to chase like a 3R like that? Or are you trying to target less but win more often? It's intangible to a certain extent just talking about it, but I hope that has answered your question. If not, it'd be good to close out. So let's just check. Okay, so look, Dog Cafe, nice name. So sorry, but just joined the stream and having a bit of problem on what my bias should be and how to decide the bias. Look, that's cool. We've answered that. There's two versions. If you watch this again, then you will see that there is two versions we use, and it basically is Fibs from a high time frame to a low time frame. A high time frame to where you think price will go based on the general principles that are taught in the course. And the other one is exponential moving averages, which we've got here. Just as a recap, so you can see down here we are bearish from this zone, coming back down through, and then you jump back up to being bullish here. But we're retesting the area, if you will. I don't really like using the term retesting EMAs because there is no structure to them. So I kind of think that's like a false saying almost. That and diagonal support or resistance I just don't do. But yeah, look, they're the two versions. And if you just watch again, just to save repeating it, then mate, you'll find the answer there. Next one we've got here, I haven't read this in full, but let's take a look. So I see traders like Rec Proof mark order blocks as last bullish candle before run down in literal meaning. So he sometimes says an order block right before an area where the market structure breaks. What are your thoughts on that? Let me just digest that for a second, if that's cool. Right before the area where market structure breaks. Do you mean to the to the upside or the downside? I'll come back to that in a second. If you can just answer that, if you're saying like, I mean, we can look at it here possibly. Has an order block right before the area where the market structure breaks. Do you mean, are you talking like down here, that sort of break? Or are you sort of saying there's an order block here, which we talked about just before, Louis? That's kind of like a really weak one, if you ask me. Before them, I'm not quite sure of the question, to be honest. If you can rephrase that. Sorry to muck you around, mate. But I will, I'll jump onto another one in the meantime. I'll just check Discord. So BG has asked in Discord, when you take an order block, this is quite a common question, to be fair. When you take an order block, does it stay valid or does it get fully tapped? For example, bullish order block gets fully tapped. Well, I mean, it just comes down to supply and demand to a certain extent. And, once an area of interest, then it flips and becomes a breaker, like we talk about it a fair bit of through this, through this area here. We would say that, what's a good example? What is a good example? There's probably not really many good ones there, to be fair. But if you have a bearish order block or a bullish order block like there, it's crap because there is no real given through here. There's no resistance through there, so it doesn't give a good example. Maybe on the 15-minute, let's have a look. So previous bullish or bearish order block. No direct ones. It's always the case, isn't it? So through here, I suppose you could say, look, this bearish order block here, or bullish order block, before we have price run up, before the bearish one takes over, it shows us as being this guy here, this chap, as he's looking good. We're expecting price to run up, but it doesn't. It blows through. If you were to draw a line through there, like we're showing, you can see that price wicks directly up and through that. So that bullish order block now becomes a bearish breaker. So price eventually does overcome it and then runs back up. But in my opinion, when a bullish order block fails to hold, it becomes a bearish breaker, and vice versa for bearish order block becoming bullish breaker. So yeah, that to me is the two nuances of that. But it's not, this is clearly sitting in an area, right? So if we just draw a line from here straight out the bottom of the order block like that, you can see that there is, price does bounce back off it. And even across this way, sorry, that always happens when you hold shift like that. Price really does, and it does respect it quite well through here as resistance. So it's more of a, the bullish and bearish order block and breaker principle is interesting in itself. I do get it, and I do subscribe to the fact that they do exist, but really you could probably break a lot of it down to classic supply and demand. So here, you've got that supply level here that people find and they want to buy it. Price runs up, it then smashes through after the liquidity up here is taken, becomes resistance, and then you've just got too much demand up above this zone. So kind of an ass-about way of answering your question, but I hope that you find some value in that. Long story short, bullish order blocks can turn to bearish breakers, and bearish order blocks can turn to bullish breakers. But notwithstanding the fact that they can also be used as support demand zones completely after. So yeah, hopefully that one's answered. What else have we got? Okay, so someone has asked here, Tuba, he's asked, we'll share that one. I wonder, how do you exactly determine the points to draw a fixed range volume? I thought you were selecting a previous critical level and moved the line to current price level. However, in Livestream 6, so this was the last one, you start drawing from a price level below the current price instead of the current price itself. You also move the line to a significant price that you determine. So that's the fixed range volume. Okay, so I'm assuming we're talking about volume profile here. Okay, so this one's pretty straightforward, I feel, because what we can do through this zone is the fixed range is beauty in itself, where you can just grab that and you can pull from here and you can go like that up there. And what I'll do is I'll show you this. We'll actually make your question smaller now, chuck it up there. We'll delete that again. Actually, no, we won't. I can pull this line all the way down here. I can pull this line all the way back out here. Or I can go above higher or lower. It won't matter, right? It'll only go, this area here will only matter for where volume is occurring, because in order for the volume profile to be established, it has to, we have to confirm how much volume is trading in a given area. So it doesn't matter if it's down here. There's no volume traded down here. So it won't affect the results based on where you're pulling your fixed range from. So yeah, you can literally go like that and down to here, and it'll only go to the lowest and highest really of the point. So the lowest of the day to the highest of sorry, not the day, but the lowest of the area you're pulling to the highest. So even down here, you can see that it doesn't want to go lower. So that's, unless I start to go back here. No, it doesn't want to do anything. Mate, that's ridiculous. There you go. So you pull it out there and you can start to see that will actually incorporate all of this volume action down here as well. So you can see as you start pulling in, and that's why it was jumping across before, because it didn't like that. And yeah, so the further you pull it away, or if you go like that, possibly, I don't think it will, because it's within the box you're targeting. So if you go like that, no, so it won't do that. It has to be whatever is covered from left to right. So yeah, hopefully that one answers your question as well. Any more Discord ones? Let's have a look here. Anything in the meantime in the chat? That's 4 hour, bro. Sorry, Louis, are you asking me, you're saying 4 hour, bro? I'm not sure, mate. Maybe you should flick me a message on Discord or something to clarify that, because if there's any confusion, mate, happy to close it out. You've got another one here. I can remember you never put blind limit orders in on the Fibs, but what is your trigger to enter in these Fibs? So you pick day M15, you zoom in more. Okay, let's have a look at that. So sorry for the many question, bro. Louis, it's all good, mate. For your other query, like I say, flick us a message. Can I remember you never put blind limit orders on the fibs, but what's your trigger to enter in these fibs? For example, you pick day to M15. Do you zoom more in? I can do. Now, if I'm going to be entering, I'm not sure on what's going on. I'd like to set a limit in some cases, maybe even on if I'm trading in the 3 minute. So if I go to 4 hour to 3 minute, then what I would do is I wouldn't necessarily set an alert for price to come to an area I'm interested in if we've got such close price action. I just set a limit and go for it. So it depends, right? I mean, if you're now looking at somewhere like this and we start to go, right, we've had a real big move down. We've taken a lot of liquidity in the form of all these stop losses beneath here. And I'm thinking, right, we want to get short, excluding any ranges we've developed or anything like that, and we've talked about, well, then you could expect even here, to be fair, because that is a high time frame fib we had set up. Well, then, if you just went and did that and you went plonk, did that, and you're aiming for the 0 level again, there's 1.85. So it's a pretty weak risk to return there as well. But you'd want to set an alert here because this could be one of those typical weekend things where price just runs down like that, maybe even does that, and then comes back up and blows both out of the water. You see that real Darth Maul effect going on of the candle with the body in the middle and the wicks just up and down. So yeah, in cases like this, on the 3 minute particularly, you set an alert because that's quite volatile action. But yeah, it depends. On a high time frame, I would as well. So I'd go like this. There's Mr. Bean. I'll do something like that, set an alert around this area. Like, let's say we've delete that guy and we'll delete this guy. Let's say we've gone, right, we've got the wick from the low to the high. We've hit the 618. We've gone to 786, then down to this level. We've come back up, but we're hitting serious resistance here. So if I was going to get in on a short in this area, let's say we drop down to the 1 hour, and I'm thinking, right, as we looked at before, you've got this here from the low to the high, it smacks right into that entry zone. But then you could also just drill right down to the 3 minute, right? And here, because it's almost so swing failure pattern-like, you don't really get a good move. But if price, what I'd be typically looking for is price to do that, maybe another wick, and some people will call that a head and shoulders. I call it a trend reversal. And once you get that, that's kind of what I'd be looking for. So you can, that's a market structure break if you call it that, right there. A proverbial make-believe one. So then if you look back on the 1 hour chart, it doesn't really mean shit because you can't see what's going on there. But from a 5 minute perspective, you can see that once you get that break and you have that zone there and you target that, that's a fantastic move because then you know that half the work is done for you in terms of waiting for a trend change. So if you blindly set your limit order here, that one there, right? And you start to go, well, I'm going to be super aggressive here and do that, which I would never do. Then someone might put a stop there. I see these traders these days, they're getting around like they're entering, drilling down from 4 hour into 15 minute and just chucking a stop loss like there, which I think is crazy. But some people would possibly enter there based on that, but be really looking for that swing move. And if you jump back on the 1 hour chart here, as we've talked about in terms of where we could possibly be looking, if we then go on the 1 hour, get rid of that, and we pull from low to high to establish where we could possibly be going from a buyer's perspective. And we have the minis. And let's say we go and fill that fair value gap right the way through down here. So you get this entry and you go, shit, look at that. There's a 9.2R sitting right there. If we jump back to the 5 minute, that's a big trade to hold and a really tight stop loss. So a lot of people, it's kind of like a trend these days where I can see people doing that. But I think that if you were going to do this and enter with a stop here, a limit order, and expect that not to get hit, I think you're dreaming, to be fair, as we like to say in Australia. But I think that if you wait for this to happen and then a retest, then you've got half a chance of actually pulling this off. So personally, I don't like to have stops that close. My risk appetite isn't that great. But if you were to do something like this, you can see it there and you get this awesome swing move down, well, then you're laughing, aren't you? So hopefully, mate, that answers your question. Thanks for that, mate. So you've sent the photo in the live stream question in Discord. Great. If there's anything else, just let me know. So what's this? Cold, you're saying coin, leverage, entry, take profit, stop loss. So you're saying you want to discuss leverage there, or could you just elaborate that one on a bit more if that's cool? Outside of that, guys, is there any I can do? Let's say we've got here, you've got a sushi. Maybe I can do that if I'm assuming that's the chart, obviously. So I could happily do a chart review based on that using these principles now, and maybe we can do one more. I think we'll wrap that up because that's already 1 hour and 5 minutes of me just talking. So it goes pretty quickly, but maybe we can have a look at that now. So if we jump into crypto USDT, I think I did. This is a really old list, guys, from yonks ago, but this is definitely not an active list I trade. It's just some old things I was keeping on. And what I'd do is I'd have crypto USDT, and then I'd move them into different sections for me to trade on. So yeah, please don't confuse this with thinking that I look at all of these. Sushi was in here, I'm sure of it. There we are. Now this isn't the perp contract or anything. I'm just looking at the spot. Okay, that's some old stuff I was looking at and I have no idea. Oh, I don't know what's going on there. I can't select anything. Trading view has been very, very weird, unless that's locked. Oh, I have no idea what was going on there. Okay, so sushi, we can see that it's not looking too good already. So same sort of deal. Pull your fib from the low right up to the high. Gives you that directional confluence. And you can see here that price, it's quite well respected. I mean, that 618 levels ran through, probably hits our 702 level, but then runs back up, reject, back up, rejection, back up. So you can see these levels automatically work quite well. If you chuck the logarithmic on or log, then again, you can see the levels do work quite well as well. Now, I like to just see price as it's occurring, so that's hence the big move up, but some people don't like that. At the moment, we are mucking around here at the 893 level, which, if you recall, it's just the difference between 786 and 1 divided by 2 plus the difference. Yeah, so that's looking pretty bad, I dare say. It's probably the only real strong level of support it's had for a while with that double top there, or the double move. But let's have a look on the 4 hour. It looks like it's showing a potential reversal of some sort now that it's tapped that zone. But it's not looking super pretty, hey? Not looking super pretty. If I would say that if you start to beat this area through here, something like that, or maybe even through here and you break that and we have like a run up, something like that, maybe you can start to target just literally simple level by level from this fib level up to this one, because you can see already, like price will run down and have these big moves up to these different levels. So when you start and establish your zone and what you're trading with based on these levels, it becomes really good reference for future, because like you could come through here, recover this area. Let's just take a look at that area in there. Oh, that's on the day. Let's go on the 1 hour. So that's pretty crap. That's the zone there. Look at it. That's it. So once you come back above this level here, you can see that you almost get quite a good entry too. It's not perfect. Let's just get that going on. You can see that you're out of what you'd normally do, but using the premise that we talk about, if you were to enter here at confluence with this fib zone, let's say you got in there and you went 2 swing lows back, then you've just got a great move up there. That's 1.88. It's not huge or much to write home about, but it's still something, right? So you've just played it. This is kind of like trader SZ styles where you're just going level to level. So, I'm not sure if he establishes fibs or what, or if he just draws his own levels on based on ranges, but it's the same shit, really. It's just level to level. Just play it one to the next. This level gets hit, and you can see that they're the fib levels that we've pulled way back from the daily, and you can almost just fire and forget them, and you just play that. So you've gone up there, you can see, and you go, shit, we're actually getting some recovery here. Again, price runs up, down into that level, and you aim for that top, you get it, and then you think, okay, so we've been a continuous uptrend here, like that, call it.
But then what happens is, this is again what Trader SZ does, I think, is he uses diagonal support to a certain extent, or not support perhaps, but maybe just as a trend. But once this is broken and you get that market structure breakthrough here, I would personally be looking at something like this. So you go, because this is the break in this zone here, so that's the break there, you can typically expect price to come back down through here and F around and clear liquidity out. But even if you pull a fib from this high down to this low, you can see the beauty of what you're getting through here. If you can get one of these moves in conjunction with one of these fib levels, that to me is like a cream move. So look, you've had a market structure break here. You can see now that prices come back up through this area. If you were to enter and you have your stop loss there, I don't know where the next swing high would be. So it's probably a bit crap. You could probably nestle it there. Again, it's subjective, because if you start to pull your levels all the way up here, it's almost not worth taking a risk, right? So if you just did something like that, perhaps maybe even a little bit higher just for some safekeeping, and you went from this level down to this level, you actually don't catch it. It's very close, but you get stopped out there if you're not taking profits on the way down. If you do, you've got 3 sets of profit and then a stop out either in profit or break even. But then look, price then has run back up and does its thing again, right? And it goes from that level down to that level, retaps that level, comes back up and hits that level. So you can see they're quite powerful once you set up these areas, and these are ranges within themselves, right? It doesn't have to be, you don't have to go drawing them. This is well and truly typical bread and butter trading, right? Just support and resistance. Color codes, please. Color codes, please. Can you please elaborate, mate? Color codes. Not sure on what you mean there. Okay, I can do another chart. Who's after another one? Let's do one more. Any takers? Louis, I'll come back to that one. One more chart. Any takers? Any takers? I'll choose one if we don't come up with one. DYDX. DYDX, is that a piss take or is that? No, not the DXY. Sorry, mate. All right, DYDX. I don't actually have that one anyway, so this is a brand new freshie. All right, so we will look at let's just go to the spot one. I've never traded this in my life, so that's why the confusion was there. You got in though. Gary, you're a bit late, mate, with dot. But anyway, DY, mate, this is ridiculous. Okay, geez. Yeah, that sucks, doesn't it? Okay, so we pull our fib from the low to the high, as we like to do, with your DNM minis. And there you go. Look, I think that if there is no recovery of this zone here, if we don't see something like that, and then onwards and upwards, then really, as we like to say, it's just a level by level exercise. Price runs back down to there, and who knows from where. So yeah, this I'm sorry to anyone who's a DYDX holder. That it's quite rough. That is quite rough. But look, you saw this a lot in like 2019. You'd have these big runs up, like price would just go crazy, come back down. Then you end up with something like this, and then it goes upwards like that. So look, it's not all doom and gloom, but yeah, mate. I mean, I can't really do much with that because we really just need to see what we do at this level. For me, it's kind of I wouldn't trade this just yet until we either saw that come down further and retest, or like I say, do something like that, because it just seems too risky. So I'm sorry about that, but there's plenty of upside. Like if you were to trade it and things go well, then you've got a great area through here to tackle in conjunction with that 618. But you can also then say, oh look, I wouldn't. I was going to pull something like this, just go from the high to the low, something like that. But if you're going to, and you really wanted to get cocky, you could go for something like that. But really, you just got to take it level by level. I mean, depends what Bitcoin does, right? But things like this, these sort of coins where prices run right up from the start and come back down to an area where people think it's tasty. I mean, this is really maximum area of opportunity for a holding potentially. But I'd really want to see what happens outside of it, because you'll see that singular wick down to that level sometimes on some of the older charts. I used to hold a bit of RSR, and you could see that back in the day. So then you sometimes see that just singular one that bounced off that one little support area, and then off she goes. But look, that truly is a play by ear one for me. I'm not interested in that just yet. What else we got? Yeah, crypto. There we go. That's probably what it was, mate. So yeah, DYDX. That's some typical influencer shills the guts out of it, and then it comes down, and then people, unfortunately get burnt. But that's life, eh? Okay, so we've got here Gary, mate. I will come back to you. So we've got Dot. That's a nice Grinchy photo there as well, mate. That's fantastic. So Dot. Let's take a look at Polkadot. And there it is there. Okay, so I did look at this a long time ago for entries, but that was that was a year ago. All right, so doing the same thing again, establishing that premise and that time frame. We want to look at something like this. We've come down, smashed through the 618. We've now come around the 893. Like we say, look, you can see those wicks that form, that find that sweet spot, and then price can generally run up. So in this case, I would think that I would want to drill down a bit more. So if we jump to the 4 hour, and what I would do is, by now you know that I like to pull some fibs to just assess a few high time frame areas. So if we did something like that, you can see price has deviated from this area. But to be true, if we pull price from there down to here, then you've beaten some structure through here. And like we say, if we're targeting that 618 area and the 786-ish area, because there's no difference to really doing it the other way around, then I guess that same sort of story with Bitcoin. Like we could be looking at something like possibly this now, like to this area back through here. Do we find some support there or through there? So if we just pull that fib from there up to here, because this will just give you some high level key timeframes that really work. So you can see that we've talked about this before. Actually, is if you get a move like that, you can actually draw a range there. And if you're looking at about the 50% range for price to come back down and play in, then it's 893 there. Look, I think that it depends on Bitcoin again. If we do something like that and then run up, great. But if not, then it's quite crucial, obviously, in timing for this one as well, because on the daily we have got a big wick down here, which is good. If there is a reversal type thing playing out, but and remember, in a typical reversal, what we'd be looking for is something like this. Get rid of that. You want to come down, so price comes down, bounce. You want to see that deep wick, price come up, bounce again, and then come up. That's the true sort of reversal we'd be looking for. And you can see that actually happens here if we invert the chart. So in this area here, where is my tool? I've got it open. Price comes up, down, bounces, boom, that, and then off she goes again once it breaks that area and that area there. So that's kind of what you'd be looking for if you're expecting a retracement, a reversal there. So outside of that, step one is we clear this area, come down, bounce, and do what we've got to do. Step two, I think, is clear the 786 as support and flip it. And then step three is, as we've looked at now, do something like that. Maybe then is again trade a SZ style where you just go level to level, where you recover that, and there's a shitload of fair value gap looking items through here. Even on the daily, that's a pretty big target. And then even if we look at some VPSV as well. So there's a shitload of naked points of control that are resting above the 786 and anywhere in between. So not many to the downside. And this is what you'll typically see, where if there is a reversal, then you do obviously leave. There'll be a naked point of control there and there, perhaps to the low side, when you price then starts deciding that it wants to come up and take the rest of these. Not as dramatic as that or as quick as that, but you guys just have to sort of suck it and see and make a call. So this one is a hurry up and wait for me. Possibly a run possibly down for some support before running back up. Depends on what Bitcoin wants. I'm going to be close to wrapping this up now, I think. So it's an hour and 20 minutes. Holy shit. Luna Bitcoin, mate. Okay, AI, let's have a look. This is the last one because we haven't looked at a Bitcoin pair yet, but let's have a look. Luna is a strong coin. Like that is, I've been looking at it this weekend and it's absolutely doesn't give a shit. I mean, look at that. That's insane. That's on the 15-minute though. Wow, look at that. Look, we've got this. This is a funny one. I mean, that's a lot of upside, and the USDT chart as well is being absolutely killer. Actually, let's take a look. Yeah, we'll have a look at that after. Actually, we'll have a look at that after. But if you were to pull your fibs from here up to here, as we like to do now, and we've got those the minis, as I like to call them. Looking through here, you've just absolutely rebalanced that whole thing. Come down to the 893 level, and then yeah, here is just crazy. It really is. I mean, that much upside, especially with Bitcoin sort of just hanging around. Like this is truly a strong token project coin or whatever. There's obviously some bearish order blocks through here, which we're encountering at the moment. But then it just depends, right? Like, do we just? This is a real suck it and see one for me as well. Like, you've got to look at that and you think all that upside. Surely, if we were to then pull a fib from, even we'll get rid of this dude here. Even if we went and did something like that from the low to the high, even around here at that 618, like Luna is just an absolute beast. Like it doesn't really respect the true TA too much. But if I was looking at something like that, you could kind of go straight across there. If that's a key previous resistance, flip support, it's broken it again and busted straight through. I'd be looking possibly for something like that if you were going to. If you start to see some market structure breaking like that, coming up and another one, that's with something like Luna, that's what I'd be looking at. Once you start to lose that first one and then it comes down and drops the second one, then possibly down to here. But yeah, Luna is dynamic. It's pretty insane. So for now, because we're at such a range high top, and that's actually all-time high against Bitcoin just about as well. I just realized. So yeah, I mean, this has got, if that flew up, then mate, I don't really know what the next step is, but you could probably expect some extensions, perhaps of, if we just change this one to the DNM white fibs, you can possibly expect some negative levels like that. They're good. If it was going to breach past that all-time high, that's what you'd be expecting to take levels at. So yeah, so hopefully that helps. But in saying that, let's take a look at the Luna chart now, and we'll look at the Binance one, because that's just generally got a bit more, it's a bit easier to see and read. So yeah, you can see that difference there, right? I mean, here on the Bitcoin chart, we're at nearly all-time high. So on the US dollar chart, this is encountering some issues here at the 382 because I've already pulled the fib from low to high down there. But, if we start to see that run through the Bitcoin chart, then this is just going to go absolutely ballistic. Because you always need to look at the Bitcoin chart first for reference. So yeah, the same sort of deal. So much upside with no downside. It's kind of odd, but Luna is a beast of its own. So great to hold, I think. And even for future reference, this is what gets on the list. The reason for it is because it's just such a dynamic coin and does things differently to Bitcoin. So it's a really good one to appreciate. So yeah, from here. Again, we're at a key level of resistance. So unless we flip that, get some support here. In saying that though, I mean, that's just truly mooned up, right? But if we start to hit this now and then we break that level there and come down, then, I'd be expecting something at least around here-ish as some support before possible return up, because that's so strong. So yeah, that's it for me, I guess, in that respect. Yeah, AI, yep. So yeah, great. No, that's good to hear. Okay, so yeah, look, guys, Matic. Look, one last one. Let's sneak it in, Kay. All right, Matic. Let's have a look while we're there, because I do like Matic. It's a good one to trade. Got some old blow-ins from old back testing and trading there. All right, that was a lot of back testing I did on this one. Yeah, so Matic's always been a good one. Always been fun to trade. So if we were to pull again, this is the same premise behind where you'd enter a trade, right? Same deal. You'd go from the low of the move before an impulse move up to the next high. So here, because we can see that price is trading below here, I wouldn't do that. because you can see it. I'd be pulling from a high to a low in that case. But here, for argument's sake, we can just take a high level view. Let's have a look at that. So the 786, again, look at this. You can see this 893 level, which is just literally, this is the equivalent of the 118 here, is just a simple split between the 1 and the 786, and that's already smack bang like right there. You can argue to say pull the line down here, but there's a few candle closes that sort of reference through here, so why not? I mean, that was definitely not intended to show that, but it's great coincidence. Okay, so we've got some wicks through here. We've got some, it's a bit of a funny one, to be fair. You've had a gap through here that's been filled. Again, you've had to retrace and run up, and we've now had some strong move up after a pin bar drop down to that level, and it looks like we could potentially be recovering it. So if price did that, again, you'd want to break that structure there, and then maybe I'd be interested in a retest there to then play it level to level. But on the 4 hour, let's have a look. 4 hour, if we did something like let's just check this out. So from there to there, that's a 0.5 level. Look, I mean, in fairness, if you pull a fib from this high down to this low, you've got this real confluence level between the 618 there and the 618 there. So I would suggest that if there's a bit of resistance there, I dare say, not only from a viewership perspective, I guess, but also just from a behind the scenes perspective too. So this one I would definitely play it level by level. If we're looking through here, and let's drop to the hourly now. Yeah, you can see that there's quite a bit of resistance, sorry, my goodness, here, which in the form of that strikes me as a bit odd. So here we've had that market structure break down here now. So because we've had that key level there tapped through there, then that would get me looking for a short. We'd go the white fibs there. And you can see that already just from doing that, because of that market structure break here, that price runs back up into that bearish order block, and then price is starting to come down. And the zero's also got confluence with that 236 level. And what's the other level there? Oops, yeah, there you go. It's a prime example of when you don't lock your stuff. It's too far away. But yeah, look, that's the confluence level there. And you can see you've already taken profit one in a matter of like an hour, I think. And then you're potentially on your way down again. So if you lose that floor there, then I'd be looking for another short down to that level. But if you regain this level up through here, I wouldn't be looking for a long unless you saw some support at this floor here and price did something like this, come down, bounce a little bit through, had a market structure break, say through there. You'd want to beat that high, or if you want to beat that high again, and then you get an entry through somewhere like that, I would certainly be targeting an area up there. Or if we lose that floor, well then, yeah, we'd be looking at something like that down to there. I hope that can offer some insight for now. I can't really aim for stupid targets. I'm not a moon boy that wants $100,000 Bitcoin with my mouth open and holding my cheeks for a thumbnail. I just play it as it is. It's not cocky, it's not smart or smart ass or anything. It's just, it is what it is as far as I'm concerned. Just trade level to level and take it from there. So guys, I think that's about it. I think that's good enough to now wrap up the module. I mean, that's been at least an hour and a half on each video. So there was 7 hours of videos plus 1.5 hours of the last module. And then fuck around, we're at 1.5 hours now on this one. I honestly didn't think it would happen, but here we are. We've just talked enough crap for an hour and a half, and it just time gets away. So yeah, cool. Well, look, been a privilege. It's been an honor. I'm really happy to have been able to share this stuff with you guys. And don't forget, there is one more thing coming up as the culmination of this course, which is the mindset trading competition. So I just do a refresh. So we've got one more Legend Nano X to give away, and you can still register right up to the day before the competition ends. So the competition starts on Tuesday, March the 1st. You get an email from Bybit. You can travel to this website here to register. You don't even have to have a new Bybit account. You can just have an old one. So look, we've got 124 people so far. The prize pool of $1,100 has been unlocked, If we get another 76, then we get another, we're at 3,000, and Bybit will also donate some more money to that as well. So there's a PS5 up for grabs, and it's going to be pretty cool. So this was generated as part of working with Bybit from just before I made the course. So it was a great way to have a 5-piece course with the 6-piece live setup. So yeah, no, look, it's going to be pretty fun. So really looking forward to it. And this is just the first of many to come, no doubt. So yeah, look, head on there. The link will be in the comments. And hopefully we'll see you guys there to shoot the proverbial. Also, feel free to join the Discord. We've got like 3,333 people, I think, now. It was a nice round number. And yeah, please just go in there, ask any questions you can. Yeah, please just ask as many things as you need to become a better trader. Because like I say, I'm certainly no pro. I'm no guru. I just like to see and share what I'm passionate about. And, you know, the byproduct is making some money from trading. So, yeah, please take care of your friends, your family. Say hi to the old chook for me. And I'll catch you guys next time. Cheers and goodbye, folks. Hopefully we'll do some more of these courses as well. Johnny and I are actually discussing whether we do some of our own MindJack version courses from beginner to advanced. So yeah, please keep an eye out. And like I say, any questions, just head to the Discord. All right, guys, take care. Speak to you in a bit.